Welcome to the Opening Bell Report.
Okay, picture this. You're sitting there Tuesday morning, you've got your coffee, and you're just scanning the markets.
The usual routine.
Exactly. And then, bam, a ticker just flashes across your screen. And it's not just a little bit green, it is bright electric green.
The sign that screams, "Look at me."
It's ripping. 7% in a single trading day.
That is the kind of move that makes you put the coffee down and lean in.
You absolutely do. And the ticker we are talking about today is UUUU, Energy Fuels. And that pup, it just raises a million questions.
Oh, immediately. Is it a fluke? Is it just hype?
Or, and this is the big one, is this thing finally heading to the moon?
Heading to the moon. It's the classic phrase, isn't it? It gets thrown around so much.
It does. But today we're going to see if that enthusiasm is actually warranted. We've been through an analysis report that suggests this isn't just random noise.
Right. Our mission today is to look beyond that flashy 7% number. We need to unpack the charts, the cash on hand, and this massive breakout signal the report identified.
We're asking, does the reality actually support the rocket emoji?
I love that. Let's find out. So, section 1, the breakout itself.
Yeah, let's start there because the report paints this really interesting picture. It wasn't just a straight line up from the opening bell.
No, and that's a crucial detail. It opened at, what was it, $21.43.
Right.
But it didn't just explode. It actually tested the lows first. It wobbled. It spent the day doing what traders call climbing a wall of worry.
Such a great phrase, climbing a wall of worry. So for someone who doesn't stare at charts all day, what does that actually mean? What's happening?
It means resilience. So think about it. The price ticks up. Some people sell to take a quick profit, and that pushes the price down a bit.
Yeah.
But instead of collapsing, new buyers just step right in and say, nope, we want this.
Yeah.
It's a grind higher. It's absorbing all that selling pressure.
So it's a battle.
It's a total battle. And the most important part, it closed near the high of the day at $23.52.
Okay, so hold on. Why is the close so important? Why not just the peak price during the day?
Because the close tells you who won the day. If it spikes and then closes way lower, the sellers won. They pushed it back down.
Got it.
But closing at the high tells you people were willing to hold it overnight. They're accumulating. And this close broke through a really critical resistance level.
It punched through the ceiling.
Precisely. And you always have to zoom out, right? You can't just look at one day.
The bigger picture.
Yeah, the 52-week context. The low for this stock in the last year was just $3.20.
Wait, $3.20? Now it's over 23.
That's a life-changing move if you got in at the bottom.
No kidding.
And the top of that range is $27.33. So trading up here near the top, it suggests some serious underlying strength.
Right. Now, the report mentions something called smart money signals. It says this wasn't just, retail traders chasing a meme. It says institutions were loading the boat.
Yeah, and that's a big claim.
So how can you actually tell the difference? Isn't a share bot just a share bot?
Not really. It comes down to the pattern. The analysis identifies something called a step-up pattern.
A step-up pattern. Break that down.
Okay, picture a staircase. The price surges up on big volume. That's one step. Then it stabilizes, moves sideways for a bit.
The flat part of the step?
Exactly. And then it surges again on another burst of volume. That kind of controlled, powerful move isn't usually just a bunch of random individuals. That takes coordinated capital.
So hedge funds, ETFs, the big players, that's the smart money.
That's the theory. Institutions accumulate, they build positions, and that creates this kind of structure on the chart. They buy the dips.
Okay, so the chart looks strong, the technicals are there. But I'm always a skeptic. Is there actually anything real behind the stock price?
That's the perfect transition. We have to look at the fuel behind energy fuels. A chart can lie, but the fundamentals eventually win out.
And the report throws out a number here that, it made me do a double take. Revenue growth of 340%.
340%. It's a staggering figure.
Let's put that into real dollars, though, because percentages can be misleading.
Fair point.
Yeah.
And context is key. The report says revenue jumped from around $4 million to nearly $18 million in the last report.
Okay, $4 million to $18 million. That's real money. That is significant.
That's what the analysis calls hyper-growth territory. It suggests the market for what they're selling is suddenly heating up big time.
But here's the trap, right? Growth costs money. When I see a miner growing that fast, I assume they're just burning through cash. They have to be taking on debt.
And this is where the story gets really, really interesting. This is where energy fuels seems to break the mold. The report calls it a fortress balance sheet.
A fortress. I like that. So what's inside the fortress?
Cash. Lots of it. Over $900 million in cash and working capital.
Whoa, stop right there. $900 million on $18 million of revenue. That ratio is, it's wild.
It's their war chest. But here's the real kicker.
Go on.
Zero debt.
Zero.
Zero. Not a penny.
Okay, that's huge in the mining world. Debt is usually the killer, isn't it?
Absolutely. Mining is so expensive. You have to build all this infrastructure before you sell anything. Most miners are, like the report says, drowning in debt. They work for the bank.
So if uranium prices dip, those companies are in serious trouble.
They go bankrupt. We've seen it time and time again. But you may be, with no debt and $900 million in the bank. The report says they can survive anything.
It's a safety floor for investors.
Exactly. The market could crash tomorrow and they can just wait it out. That financial health is a massive part of the story here.
So they have the chart and they have the cash, but what are they actually doing? This brings us to what the report calls the monopoly factor.
And this might be the most important piece of the entire puzzle. It's an asset called the White Mesa Mill.
White Mesa Mill. Sounds like it's out of a movie.
It's in Utah. But its importance is that it is the only conventional uranium mill operating in the entire United States.
The only one.
In the whole country.
The only one.
That seems insane. I mean, we talk about moats in business. That's not a moat. That's a fortress on an island surrounded by sharks. It really is. And think about why. Have you ever tried to get a permit for a nuclear facility in the U.S.?
I can't say I have, but I'm guessing it's not easy.
It takes decades. Literally, the regulations, the environmental studies, the lawsuits. You could not build another one of these today quickly, no matter how much money you threw at it.
So they have a time advantage that is basically priceless.
Correct. And this is where the geopolitics comes in. The U.S. government is getting very serious about energy independence, about not relying on Russia or Kazakhstan for nuclear fuel.
And rare earths, too, right? The report mentioned that.
Yes. The mill can also process rare earth elements, the stuff in electric cars, wind turbines, fighter jets.
And almost all of that currently comes from
China.
I see the picture now. If the U.S. wants a domestic supply chain for this critical stuff,
they need a place to process it. And Energy Fuels has the only conventional game in town.
See, it's not just a company, it's a piece of strategic national infrastructure.
That's how the bulls see it. You're buying a choke point in the U.S. energy grid.
Okay, but let's play devil's advocate. There's always a but.
Always a bear case.
The valuation. The report mentions it's trading at roughly 40 times sales.
Yeah, 40x sales. There's no way to sugarcoat that. That is a premium price tag.
So why pay that? The report compares UU to the giant in the space, Cameco, ticker CCJ. Why not just buy the big, stable, profitable one?
It's a perfect comparison because it gets to the heart of the investor psychology. Cameco was described as the safer, slow-moving giant.
The cruise ship. Hard to sink.
Right. You buy Cameco if you want uranium exposure and you want to sleep at night. But Energy Fuels is described as a coiled spring, a leveraged bet.
What does leveraged mean here? We just said they have no debt.
Good question. It means operational leverage. How much the stock moves relative to the price of uranium. The report has this moon thesis.
Let's hear the moon thesis.
Okay, the scenario is uranium spot prices spike to $100 a pound. In that world, a giant like Cameco might go up, say, 20%. A great return.
I'd take 20%.
But UUU, because it's smaller and has this unique position, could potentially double 100% return.
I see. So you're paying that 40x sales premium for the ticket to that explosive upside.
Exactly. You're paying for the volatility to the upside. You want the speedboat, not the aircraft carrier.
So if you want safety, you buy Cameco. If you want a shot at the moon, you look at Energy Fuels.
That is the trade-off, plain and simple.
Okay, let's get down to brass tacks then. The verdict? The numbers. Where does the analysis see this going in the short term?
Well, the next hurdle, the immediate resistance, is $25.
A big psychological number.
It is. If it can clear $25, the report says the target shifts to the previous highs. So we're looking at a range of $28 to $30.
Okay, from around $23 to maybe $30. That's still a nice bit of upside.
It is.
Yeah.
That's the blue sky scenario. But we always have to look down, too. You need an exit plan.
Right. Where's the ripcord?
$21. The analysis identifies firm support right there, near where the breakout started.
So as long as it stays above 21, the bulls are in charge.
That's the idea. The analysis suggests that above 21.1, the bulls are in total control. Below that, you'd have to reevaluate if the breakout failed.
It's just a fascinating setup. You have the 7% breakout, the debt-free balance sheet, that 340% growth.
And that monopoly with the White Mesa Mill, that's the strategic ace up their sleeve.
It's a compelling story, but it is definitely a hold-on-to-your-hat kind of investment, not for the faint of heart.
Not at all. It's a bet on a very specific future, one where the U.S. goes all in on domestic nuclear and rare earths.
So here's the thought I want to leave everyone with. We talked about the giant versus the coiled spring, Cameco versus Energy Fuels. What kind of player are you?
That's the real question.
Do you prefer the safety of that cruise ship, knowing you'll probably get where you're going, or are you looking for that speedboat, paying a premium for a chance to really launch?
It really comes down to whether you're buying the dip or buying the breakout.
Exactly. Think about that. Thanks for diving in with us today on Energy Fuels. This is going to be one to watch.
Don't forget to like, share, and subscribe for more.